The next topic that we're going to talk about continues within a broad kind of umbrella, if you will, of leverage. But we're going to talk about how you analyze financial leverage. We just finished showing you how you analyze operating leverage. And again, this next few videos now, it's going to be about how you analyze financial leverage. Now, the way you analyze financial leverage is to do what's called an EBIT, earnings per share analysis. Now, a couple of things about this. One, what's the purpose of an EBIT, earnings per share analysis? Well, what it's designed to do now is to tell us the capital structure, the mix of capital that will maximize earnings per share. EBIT, earnings per share analysis, its purpose now, what its goal is to tell us what capital structure, what mix of capital we should use to maximize earnings per share. Now, an important caveat to this, as a financial manager, my normative objective function is to maximize shareholder wealth, not earnings per share. And I'll tell you this again before we get through with this, but when we get through with this and it tells us what capital structure to use, what mix of capital to use, we need to realize that that's maximizing earnings per share. Studies show that the mix of capital you should use to maximize the wealth of the shareholder, the price of the stock in the market, the value of the firm, that mix of capital is always something less. So if the EBIT, earnings per share analysis, tells us to use 60% debt financing, we should use something less than that. How much less than that? That's a little bit opaque. It's not real clear. We don't have a great model to tell us that. But what EBIT, earnings per share analysis now, that's going to tell us the mix of capital, how much debt to use if you want to maximize earnings per share. We're really looking for how to maximize the price of the stock in the market, the value of the firm, the wealth of the shareholder. Now, given all of that now, I'm going to show you how to do an EBIT, earnings per share analysis. A couple of formulas that you should be familiar with and that you should know as we go through this. One is, how do you calculate earnings per share? Well now, if you go down the income statement and you get the EBIT, if you take EBIT and subtract out interest now, you're left with earnings before taxes. If you multiply earnings before taxes times 1 minus the tax rate, then what you have is net income. Multiplied by taxes, by the tax rate, would tell you how much you pay the tax man. 1 minus taxes, 1 minus the tax rate, that tells you how much you get to keep, how much your net income will be. If you subtract from net income your preferred dividends, that's going to be earnings available to the shareholders. And if you divide earnings available to the shareholders by the number of shares outstanding, the number of common shares outstanding, you get earnings per share. So one formula that you're going to need to know how to calculate earnings per share. And again, earnings per share is your operating profit, EBIT, less your interest. Again, that gives you taxable income. Multiply that by 1 minus the tax rate. So if you pay 30% taxes, 1 minus that would be 0.70 or 70%. If you multiply taxable income by 1 minus the tax rate, that's net income. Subtract out preferred dividends, earnings available to the shareholder. Divide earnings available to the shareholder by the number of shares outstanding, and that gets you earnings per share. Something else you're going to have to know how to calculate is what's called the financial break-even point. Now, the financial break-even point is the interest the company owes, the interest on the debt, plus the pre-tax dollars you need for paying the dividends on your preferred stock. So it's the interest owed by the company, plus the pre-tax dollars you need to pay the dividends on your preferred stock. Now, the financial break-even point, whatever this number is here, this tells you the level of EBIT, the level of operating profit that a company would have to earn to make earnings per share 0. So this is the level of operating profit you need to earn in order to make earnings per share go to 0. And we'll see how all this is used in the next video. But these are two formulas that you're going to have to be familiar with, and I thought I'd just devote this video just to that.